The All Investies have some thoughts on Tesla's Q3, Optimus, Elon's compensation package, and plenty more.
Like that.
All right, Tesla reported their earnings on Wednesday. As you guys know, we record on Thursdays. You listen on Fridays. Record revenues, $28 billion, up 12% year over year. Massive amounts of free cash flow, $4 billion. I think they're up to $40 billion in cash, which is always great when you're going into some big capital-intensive projects like Optimus and like self-driving. Downside, operating profit fell 40%. Stock dropped a bit, 4%, but bounced back. And on the earnings call, Elon emphasized the importance of his $1 trillion pay package, which will give him just but 12% additional stake over the next 10 years. If he hits absurd targets, that would make everybody who holds the shares in the company extremely wealthy, and they would benefit more than Elon himself. And here's his quote: "My fundamental concern with how much voting control I have at Tesla is if I build this enormous robot army, can I just be ousted in the future? I don't feel comfortable building that robot army if I don't have at least influence over it." And he called Glass Lewis and ISS corporate terrorists. These are the people who vote on behalf of passive index funds for things like who's on the board of Tesla. A vote for Elon's pay package will be November 6. Polymarket thinks it's going to pass, as we talked about before. They tend to get it right 85% of the time in this time frame, actually.
For what it's worth, personally, I would be very surprised if the compensation package isn't approved, overwhelmingly, in fact. I said a few weeks ago, I was guessing probably around 75% of shareholders who vote likely to approve. That is accounting for a lot of the dumb fuck institutional investors who don't think for themselves and listen to the so-called corporate terrorists advising them to vote against this package. It accounts for a lot of the pension funds, index funds, and others as well, potentially voting against this, not because they're looking out for the best interest of their clients and therefore the company, but instead for virtue signaling reasons. But a portion of the big institutional investors, and I suspect the vast majority of Tesla retail shareholders, will approve this package because it directly incentivizes Elon Musk to hit absolutely absurd milestones, not just in terms of market capitalization. The final tranche, of course, being $8.5 trillion, certainly will make a lot of Tesla investors quite wealthy. But in addition, there's a ton of performance metrics, including 1 million FSD subscribers, 1 million Robotaxis operating, 1 million humanoid robots sold, and then a mere $400 billion in EBITDA. In short, you'd have to be abso-fucking-lutely brain dead to vote against this if you own Tesla stock. And the only reason you would vote against this if you own Tesla stock is so you can tell people you voted against it because you believe that it's better to get some gold stars from your ideological social circle than it is to vote in the best interest of your investment. Now, I could be proven wrong, but that would be my guess. So if my guess is on point, then the poly market 79% chance is actually really low. I'm not saying it's a low percentage. I'm just saying I'm not predicting it's going to just slide in at like 54% approval or something. Let's check the updated poly market actually on this. Wow. As I'm recording this a couple of days after that podcast, money's now got this at a 93% chance. By the looks of it though, 91 now. It looks, and 92 as I'm recording, it's moving a bit. This appears to be extremely low volume unless this is in millions of dollars. $9,299 volume? Is that in the last 24 hours? It'd be very easy to manipulate this outcome if that's all that's been bet on this. With all of that said, it is imperative that everyone listening who owns Tesla shares, even one share, vote. It's not just your right, it is your duty and obligation to vote on these matters. Because if you don't, you can rest assured some of those who seek to harm Tesla, harm Elon Musk, will be voting against the compensation package. And that is the worst possible outcome for Tesla. Don't just vote yourself, but make sure your friends, family, colleagues have also done so.
79% chance as of Thursday afternoon. I guess, Chamath, there's a couple of ways to go at this. There's the performance of the legacy business, there's the potential of the future business, and then there's governance, the company moving to Texas, and this pay package, and this transition period for Tesla, which is going from somebody who sells cars, really nice ones at a very nice margin, but a lot of competition now, and then this business that obviously Elon himself is obsessed with, which is the Optimus, as we saw when he was at the All-In Summit. Take it wherever you want, Chamath.
I'll say three things. Stan Druckenmiller has this very useful comment about stocks, which is when you buy it today, you're trying to buy what that company is going to look like in 18 months from now. And
well, this might be true for a lot of investors. In fact, the majority. It might explain a few things, but certainly not true for me. 18 months is basically 3 seconds into the future. This would explain why most investors, and I use the term fairly loosely, more like traders, repeatedly and consistently miss massive disruptive opportunities. If you're only looking 18 months into the future, and as a reminder, Tesla stock analysts, all stock analysts publish mere 12-month price targets. They're not even looking 18 months. If that's as far as you're looking into the future, you're going to miss just about every meaningful transformation, disruption, and opportunity to ever manifest in public markets. And I don't say that lightly, but accurately. This would also explain the decision of many so-called investors to sell shares in a company about to undergo a massive transformation or currently undergoing a massive transformation. A company currently planting seeds, watering them, nurturing them, that will germinate into, let's just say, hypothetically multi-trillion-dollar opportunities, but not in the next 18 months. This would explain a lot of things about some of the absolutely brain-dead decisions investors make about buying and, even worse, selling stocks.
What it's doing today doesn't matter. The thing about earnings and P&Ls and quarterly reporting is that it's looking backwards, and it's trying to give you a sense of what happened, not what will happen. So I think there are three critical things about what will happen that I think are important with respect to Tesla. The first is at the foundational technology layer. And Nick, I sent you this tweet, but it's what he said about AI5. I've made these comments before, but he had these multiple efforts with Dojo and other stuff that he merged into one unit. And the quote is pretty incredible. We're going to focus TSMC and Samsung on AI5. The chip design is an amazing design. I've spent almost every weekend the last few months with the chip design on AI5. By some metrics, it will be 40x better than AI4. We have a detailed understanding of the entire stack. With AI5, we deleted the legacy GPU. It basically is a GPU. We also deleted the image signal processor. This is a beautiful chip. I've poured so much life energy into this personally. It will be a real winner. Why is AI5 so important? What AI5 is the building block of a system that I think you'll start to see not just in the cybercabs, but also in Optimus. So from a functional technology perspective, there's been a leap, and that leap is going to come into the market. That was the first thing he said, which I thought was really important. The second thing was what he said about his energy business, which I think is the critical adjunct to believe robotics and autonomous cars. If robotics and autonomous cars work, what you really need is an energy business beside it that is humming and on all cylinders. Why? It's how you make LFP battery cam that will be the limiter. Energy will be the limiter. But what he's showing, and Nick, I sent you this tweet, is that business is just on a tear. It's printing $3.5 billion a quarter, and its operating margins, an energy business, 30%. And so what you're going to see are battery packs of all shapes and sizes, the huge battery systems that's going to go into data centers, but then all the way down, I think, to the small LFP cam that he's going to need to power all these things. And then the third thing is his comments on Cybercab, which is that this thing is just going to be a shockwave. So I read all of those things and I was very bullish. I think that he is humming on all cylinders on the critical layers of the stack that he needs to build this next version of Tesla. My concern, I think there's a real concern that I have that this vote is going to go down to the wire. I think that ISS and Glass Lewis, I think that these organizations are pretty broken. I think the way that they make decisions are hard to justify. An example of this, they asked to vote down Ira Ehrenpreis as a director of Tesla because he didn't meet the gender components, but then they wouldn't vote in favor of Kathleen Wilson-Thompson, even though she does technically meet the gender requirements. So it's very confusing where ISS and Glass Lewis are coming from. So I think there's a risk that this package gets voted down.
Now, in fairness, technically there definitely is a risk. I think it's extremely low, but hey, I mean, I have been surprised before. But Chamath's point about Arse House and ISIS and their recommendations and their supposed reasoning behind them, I scrutinized some of this in a recent video. It doesn't make any fucking sense. One of the primary concerns about Elon Musk's compensation package was that it would dilute existing Tesla shareholders. But I went through the math with Grok's assistance, showing that even in the very first tranche, factoring in dilution, Tesla shareholders would have an investment that had roughly doubled in value, and the final was about 7 or so times what it's currently worth, factoring in the dilution. So the reasoning made no sense. None of the reasoning makes any sense. They're not doing this for logical reasons. They're doing this for DI/woke/virtue signaling/political reasons only. Musk on Tesla's earnings call rightly described these proxy advisory firms as corporate terrorists, which they are.
Shine a spotlight on one of those points that you made with these proxy advisory services. So I think for years, people have wondering, why did corporate America go so woke, especially in the early 2020s.
It's coming. He's about to say it's because of these fuck-face proxy advisory firms, etc. Everything got captured by the woke mind virus. DEI, every institute. Then they apply pressure on companies, and in this particular case, on index funds, on mutual funds, to vote a certain way, because you don't want to be shown to be anti-DEI, which is, in fact, anti-meritocratic. Therefore, you must comply. This is what's happened. This DEI insanity, also known as didn't earn it. Proactive racism, sexism, and discrimination based on things that do not matter. Not merit, but arbitrary factors. What's your body mass index? Who do you like to fuck? Not who's the best candidate for this job. Most competent, most capable. It's entities like this that have put pressure on index funds and so on to vote certain ways. They've captured huge portions of corporate America and other parts of the world as well. Very few of these companies or entities have the backbone to stand up and go, nah, get fucked, mate. You're insane. We're not following your recommendations. They make no sense.
Where they created all these DEI departments and, they didn't have to do that. And a big part of the reason is that those initiatives came from Glass Lewis and ISS. I think Elon's jokingly called ISS ISIS. But basically what happens is they make recommendations for how shareholders should vote on different resolutions. And the index funds basically just defer to them for whatever they should do. So they effectively control or almost control the voting for all of these board level resolutions that every public company has to make. And so they've been the ones who've been imposing all these DEI requirements, all these ESG requirements, if you're wondering where those things came from, because just these two companies, which no one's ever heard of, they were captured a long time ago, meaning they were captured by the woke crowd years ago. And so this has really been the root of why corporate America has gone woke for a long time. And look, there's also pressure from the outside, from boycotts, or, there's some pressure sometimes from employees and that kind of thing. But a lot of it came from these two companies that no one's ever heard of. And I think it would be a good idea for someone to take a look at this and figure out what happened. Maybe someone like Chris Rufo should investigate what was the impact of Glass Lewis and ISIS on corporate America going full woke for so many years. Because it certainly didn't help corporate profits.
It didn't help profits, and they don't have logical explanations for a lot of their decisions.
He's right, and this actually is quite important. There's definitely something to look at here. These proxy advisory firms are a massive scam. They do not have skin in the game. They do not own shares in any of the companies. They're advising investors to vote this way or that way on. They don't own the company. Therefore, if their recommendations harm the company financially, harm the company's performance, their competitive advantages, if they harm the company in any way whatsoever, makes no difference to the dickhead advisory firms because they don't own the investment. They have no skin in the game, yet they're making direct recommendations to those who do have skin in the game. Importantly though, you're not going to find many retail investors following the recommendations of these proxy advisory firms, but you will find index funds who own enormous numbers of shares in companies, mutual funds, pension funds, a lot of money tied up from entities that themselves don't directly have skin in the game either, but instead provide a vessel for others to own a slice of a particular market or to have their pension and so on. It is a very messed up situation. Our proxy advisory firms with no skin in the game are advising, let's say, big index funds who also only indirectly have skin in the game because they're not investing in stocks because they think, say, for example, Tesla's a great investment. By their own rules, for example, S&P 500 is required to own Tesla and all of the 500 largest companies in the US based on their market cap and weight them based on market cap. Then investors purchase the S&P 500 to capture that slice of the 500 largest companies in proportion to the market cap. Yet it's not the investors who've purchased the S&P 500 who get to vote. It's the S&P 500, which again, itself isn't deciding, I think Apple's a great company to buy, I'll buy a bit of Apple stock, I'll buy a bit of Tesla stock, but instead is rules-based, mechanical, brain-dead, and must buy or sell based on the weightings, the market cap, and whether they're in the top 500. Those with the least skin in the game have the ability to control outcomes on many of these shareholder votes, especially if there's low participation from retail shareholders or low percentages of retail shareholders in general. And if all these fuckfaces are deferring to woke, politically, ideologically motivated proxy advisors for their voting, this is a very dark situation. It's very lucky for Tesla that there's so many retail investors making up the shareholder base that we can still have enough input. That's why it's so important to vote, to change the outcome on these matters. Otherwise, we'd be fucking toast.
Yeah. And why aren't there active investors or active managers in these passive groups who would make a decision on these things?
They're too small. The banks call me every week. And one of the things that I get is sort of like, they tell me like, hey, here are the big trades. Here's the flow. Here's, if you want to be in market, here's what I recommend. That's what they're telling me. One of the things they told me this week, which I thought was really shocking, is there's so few active managers left. It's so overwhelmingly passive money. The next largest group is now retail. And so what a lot of these professional money managers do now is they basically wait to see where retail is going and they follow them. So there isn't the people with a diversified asset base to be able to stand up and say, I don't think what ISS and Glass Lewis are doing is right. And so what happens is they kind of, as Zach says, they can just kind of run amok. And they build a very healthy business being this interloper to provide opinions. It's not clear where their opinions come from. It's not clear what they're rooted in. It's not clear that there's a way to adjudicate and go back to them and say, well, you got this wrong. It's just not clear. But, they probably make a very healthy margin doing it. And everybody, as Zach says, just kind of turns over responsibility to them.
It is an interesting fact that we kind of just say, hey, the guys who are the actual custodians of the shares don't have to do the job of holding the shares. Like the job of being the holder of the shares is to vote the shares. That's all there is to do as a shareholder. You cast your vote. And these guys
abstained. They could also abstain, right?
Yeah, and these guys are getting paid a fee to actually do that work, which is...
Quick detour here on the same topic. Discussed this recently in a few videos as well as posting on X, and I agree. At the very least, I personally do not believe that an index fund has a product for consumers to invest in that happens to own shares in companies should be voting on these matters. At the very least, they should choose to abstain. If, this is important, if they're entirely passive and they would be willing to follow the advice of these corporate terrorists, the proxy advisory firms, they should automatically abstain. If you, as the custodian of the shares, the shareholder, are not willing to do the thinking and make the decisions yourself, you should not be outsourcing your thinking to somebody else. That's insane. However, as I posted on X, a case can be made for index funds specifically to not have voting rights on shares held. As in, they can't vote. Not just that they should abstain, but they can't. And here's why. They do not invest in companies for any reasons relating to the company itself. E.g., well, Tesla looks like a good long-term investment. They invest to replicate the performance of the index rather than in companies per se. It really is worth having this conversation because right now, if we look at the top institutional shareholders for Tesla, by the way, 56.5% of all Tesla shares publicly available held by institutions. The Vanguard Group itself is the largest Tesla shareholder, the biggest institutional investor, over $250 million Tesla shares held. Tesla's public float total is about 2.8 billion shares. Total shares outstanding, maybe 3.3 billion or so. Now think about this. If the Vanguard Group, e.g., Vanguard has the S&P 500 ETF, follows the recommendation of these corporate terrorists and votes against Elon's compensation, we're approaching 10% of Tesla's public float as a no. Batshit insane. Is it fair? Is it right for such a significant shareholder or any shareholder? But especially when you can meaningfully, almost single-handedly change the outcome of some of these shareholder votes. Is it really right? Is it ethical? Is it reasonable? Is it fair for them to vote on these matters yet not to actually make the decision what's in the best interest of the company, but to instead outsource that thinking to an external entity who claim to be providing their best possible recommendations, yet whose reasoning doesn't stand up to scrutiny, isn't at all rational, and in many cases is clearly and directly harmful to the company's financial performance and future prospects? This really is a conversation that needs to be had. In fact, here's a proposal. No institutional investor, period, should ever act on the advice of a proxy advisory firm. And in fact, should they choose to vote on any of these matters for any company ever, they must, in writing, explain that they have themselves drawn the conclusions that led to their decisions on these matters, explain their reasoning and why that reasoning is likely to be in the best financial interest of the shareholders in their product, which happens to own a slice of the company whose matters they're currently voting XYZ way on, and here's why they're voting that way. At the very least, if you are going to vote, surely you must articulate why, explain your reasoning, and how it's in the best interest of the company, or abstain.
Call it 0.5% or 0.25% or 0.1% of the assets that they hold. So like, what are the people they're doing? If it's all automated trading, why aren't they just...
I don't know if you guys own a lot of equities, but just to give you a sense, there's people that manage the stocks, right? There's people that transfer the stocks. There's people that then give you a recommendation on how to vote the stock. Then there's people that hold a virtual representation of that stock. Then there are people that transfer that virtual representation.
And they will not stop calling.
So the point is, like, we have so financialized everything that there are billion-dollar businesses that sit at every single step of the way. And to your point, Freeberg, I think this is where
no one's actually a shareholder.
The tokenization of stocks may be a really good thing because it'll put the responsibility back into the owner of the stock, because the wallet will centralize all that activity because you won't need to have all this other stuff.
I have been getting phone calls from Investco QQQ because I own a bunch of QQQ and some accounts or whatever. And they were calling 3 times a day for I don't pick up my phone. Who's calling me on the phone? Unless it's one of you 4 is calling me to say goodnight. I don't. That's the only time I pick up. It's when, and so I finally pick up and they're like, hey, we need you to vote. I'm like, I'm not voting. I don't know who you are. They're like, well, let us explain to you how to vote. And I'm like, I don't want to vote my shares. I just want to own QQQ. I'm good. You
By
guys
the way,
handle it.
Some of this infrastructure is so decrepit and old, like trying to get shares, for example, that you've bought in the private markets when a company goes public, just getting them registered and transferred in the position to be sold can sometimes take 3 or 4 weeks. Can you imagine? The markets move an entire order of magnitude in 3 or 4 weeks. It's crazy.
Here's Elon's pay package milestones. Market value, $2 trillion. I think they're at 1.4 trillion right now, something around there. Operational milestone, 20 million vehicles delivered. And then you just go right down to 6.5 trillion. But on the operational milestones, 10 million active FSD subscriptions, which they're far away from right now. And 20 million vehicles, I think they've delivered 6 or 7. 1 million robots delivered. 1 million robotaxis in commercial operation. Those are big numbers.
They are astronomical. When you actually think about the implications, by the way, I just noticed missing a few of the final market cap milestones here. It's actually cut off. Goes all the way to 8.5 trillion. But regardless, who in their right mind as a Tesla shareholder votes against an incentive structure that lays out these goals and milestones for Elon Musk to be fully compensated? As I've said many times, you'd have to be completely brain dead to own Tesla shares and vote against this. At the time this plan was first proposed, Tesla was about $1 trillion market cap. The very first market cap milestone, which needs to occur in conjunction to an operational milestone. You can pick and choose, right? But you need one from each of these columns. Company had to double, plus one of these. And these are some astronomical targets. They are achievable, not easily, but they are achievable. What shareholder would vote no? You're creating phenomenal incentive to make this happen. Incentivizing a guy with a phenomenal track record of making the absolutely impossible happen over and over and over across multiple domains and in record time. You really would have to be brain dead.
50 billion adjusted EBITDA and then straight down the line to 400 billion EBITDA. If you were to look at this Optimus business, just back of the envelope, these robots are going to go for 20K, he said, ultimately. Maybe they're 30. They'll probably have a 30% margin like the cars do or something similar. You'll make a little bit off the software stack. And if you were to if every millionaire owned one of these or, they took some number of the jobs, the TAM for this just in the United States.
This is where it's going to go. I don't think
it's going to be huge. We're talking hundreds of billions of dollars.
If I had to bet, I think a very fun poly market is where do the first million robots go? I'm willing to bet dollars to donuts that these robots go to Mars. I don't think they're going to.
Oh, wow.
They'll be in the Tesla factories.
So SpaceX buys them and sends them to Mars. Yeah.
Some to Mars, obviously. I've discussed this for plenty of time. I mean, obvious things are obvious. You send the hardware, and the great thing is if you've got the hardware nailed, software updates over time, can become increasingly capable, can work autonomously. Obviously, there's going to be a fuck ton of Optimus robots going to Mars. But I don't think that's got to be the majority of the first million Optimus humanoid robots produced, not even close to it. Most of those will be deployed in factories and warehouses, which is more training data and more capabilities for further deployment for next generation. Don't get me wrong, like I said, plenty of Optimus will be headed to Mars, but I think relative to the number of Optimus humanoid robots that don't go to Mars from Gen 1, I think it's going to be a fairly low percentage.
How else are you going to get a fleet of the workforce?
Or they'll go into the mines. I think they're going to mine.
They could go to the mines.
Coal. Send them in to get that clean, beautiful coal. Oh, so clean, so beautiful. We could send those Optimus robots.
Well, it's not coal, Jake Al. It's the fact that our mining is really limited by the human exposure from the pressure and the heat. If we can mine slightly below the area that we mine as our maximum depth today, it would unlock an extraordinary supply of minerals that we can't access today. And so automation,
obviously.
Yeah. And you don't want to figure out like how to create potable water and breathing mechanisms on Mars for the first 5 years. Send robots. Guess what? They don't need to eat or breathe or pee or poo.
And they can get charged with solar.
That may sound like a really stupid thing to say, but it becomes
not stupid at all. I mean, on this, again, I absolutely agree. A robot doesn't need a spacesuit, doesn't need anywhere to shit, doesn't need food, Just needs to be able to charge. Here's how you do it. Send some solar panels over and some batteries and a bunch of Optimus. Next minute, you got everything you need to start and continue. I do think for the first many years, humanoid robots will be almost the entire workforce on Mars. Early infrastructure, extraction of some resources. Obvious things are obvious. But the opportunity on Earth is absolutely gigantic. And we've heard the first Optimus production line will be set up ultimately to do around 1 million robots per year. If you sent just 1% of that output per year for 5 years, that's 50,000 Optimus robots. 10% would be 500,000. I mean, even in that scenario, you got 500,000 humanoid robots on Mars, you're still the other 90% here on Earth. So Chamath's point, maybe he just wanted to flex about realizing how obvious it is that Optimus are going to help with Mars. But I think he seems to be overstating the proportion of these robots that are headed to Mars on Gen 1 versus will be used here on Earth.
Huge amount of infrastructure that you otherwise wouldn't need to build on.
That's right. They just got to power up. You just got to give them a plug.
And just a couple of solar panels.
And by the way,
batteries,
guess who makes those batteries? Tesla.
Yeah.
And
It's all coming together here.
Guess who makes the brain? Tesla.
Is Elon going to turn into Jared Leto in 2049? Blade Runner 2049?
What is that?
That's the sequel to. It's the sequel by Dennis Villanueva of. It was my alternate background.
First of all, his name is Denis Villeneuve, and if you're going to pronounce a Canadian's name, get it right.
Get his name out of your mouth.
Get his name out of your mouth until you learn how to pronounce it.
Name out of your mouth. Get
Okay,
that
let's go.
out of your mouth.
Isn't it nice to hear some people who aren't completely brain dead talking about Tesla for a change? Even Jason. If you know, you know. I found it quite interesting that Chamath believes that there's at least a somewhat of a chance that Elon's compensation package does not pass, isn't approved. I mean, God, that would really not be good. That's putting it lightly. And obviously, plenty of Optimus robots will be on their way to Mars, but I don't think it's going to be even close to the proportion that Chamath thinks. Proxy advisory firms are an absolute scam. And that quote Chamath provided, most investors are looking at what a company is going to be like in 18 months. Man, that really does explain a lot. If I was that retarded and I was only looking 18 months into the future, all of the dumb decisions I would have made. I don't know how many times I would have sold Tesla stock in the last 10 years instead of buying it hand over fist if I was only looking 18 months into the future. A short investment horizon is a guaranteed way to make very bad decisions and pile up regrets. And yes, 18 months is very short term. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has been part of my daily health protocol for almost half a decade. It's packed full of vitamins and minerals and helps me fill in nutritional gaps while supporting energy, digestion, and immune function. It also has prebiotics and probiotics to promote gut health. I take my health very seriously, and so should you. Try AG1 today by visiting drinkag1.com/SMR or click the link in the pinned comment and enjoy a free welcome kit with vitamin D3 plus K2 and AG1 travel packs. That's drinkag1.com/SMR.